Big changes are coming. Bitcoin is about to reshape global finance in 2025. These massive catalysts could send Bitcoin soaring. Bitcoin in banks, tax-free ETFs, and entire nations stacking sats. If you're serious about Bitcoin, you can't afford to miss this. Will these moves push Bitcoin past 100k? Let's break it all down and stay tuned. Okay, this is a slide that I've presented in one of my earlier videos in the aftermath of President Trump being elected back in office. Now, I've highlighted in green where I felt these were the major catalyst drivers and have been fulfilled. And then the four that you see underneath to mean that it's currently in execution. So, and we can all agree that ever since the arrival of Trump, and if you remember, leading throughout the campaign and to the point where the votings took place, we saw a massive bull across the entire capital financial markets in the US at large, have all seen tremendous amount of gains and bull rallies, not just within the markets, financial markets, but also in the crypto market, particularly Bitcoin, where it's seen up until $108,000 per coin. And that has actually been the all-time high at that moment. So it's fair to say that ever since Trump has arrived in office, it's now becoming a pro-business, a pro-crypto type administration, which is in stark contrast with Biden and Kamala Harris. Particularly, it's been hostile towards the crypto industry, the digital assets, Bitcoin. Now we don't have any of that ever since Trump has arrived back in office. So that's great news. The second point is Gary Gensler has been the outgoing SEC chair. And if you recall, as part of the broader Democrat administration headed by Biden, there were kind of the anti-crypto task force that were trying to put a lot of barriers and lawsuits against players in the crypto industry to make lives impossible for the crypto industry to even prosper and to even innovate in the US. Trump being back in office, being pro-business, pro-crypto, one of the key pledges he's made, which is currently being working on at the moment, is he wants the US to become the crypto capital of the world. So, new SEC chair. This would mean that what was once lost in the offshore space in terms of innovation, in terms of decentralized finance projects, indeed real-world assets tokenization, which for me is going to be the key catalyst in terms of bringing tremendous amount of capital into the crypto and blockchain industry in terms of coin projects, which are very interesting. So all of that innovation is coming back into the US. And for me, Bitcoin is going to take center stage of that. So that is great news. You remember the third point in terms of this ridiculous former Harris policy that she wanted to kind of bring unrealized gain tax as part of the presidential campaign, which was a death wish. So, of course, being Trump back in office, that is now dead in the water, which means it's great news for Bitcoiners. Something that is still, for me, still pending is the whole business of overhauling the entire tax regime in the US and indeed other countries. They need to think about the treatment of the tax regime because for me, they're still 20th century antiquated, which is not fit for purpose anymore and doesn't make sense to have those same tax regimes in the new digitized era, right? So for me, capital gains tax and even removing part of the income tax should be revisited, and other countries should take note that this is going to happen at some point because it just doesn't make sense. At the same time, where countries are trying to bring back the crypto industry innovation to the countries, drawing more capital to make the country more prosperous in terms of leading edge, well, the tax has to be slimmed down. The fourth point, individual states have Bitcoin reserves, including sovereign wealth funds, pension funds. We have seen a lot of US states have already included Bitcoin strategic reserves at the state level. And the recent announcement from Trump to now bring it up to the federal level, which has been a recent announcement of his, that is pivotal. And that's going to even spark more capital brought into the Bitcoin ecosystem at large, not just within the US, across the world. We all know that Bitcoin is a totally decentralized network which cannot be tampered and influenced by any government or player or investor. That is one of the beauty attributes of Bitcoin. The fifth point, public and private companies adopting the strategic playbook in terms of acquiring Bitcoin in their corporate treasuries and including their balance sheets. Well, given the new FASB accounting rule, which allows the US publicly registered companies to account for both the upside and the downside value acquisitions of their digital assets on their balance sheets, which would never happen before, which means all of the US publicly registered companies now have that luxury and advantage. So strategy headed by Michael Saylor have done just that. And I expect this momentum to continue in the weeks and months and years ahead. Not just for the US publicly registered companies, mind you. I expect the same FASB rules to also have that ripple effect on other nation state public registered companies as well. It's just a question of a catch up now for the rest of the world to follow suit with what the US have done. The next point around the cheap money era, we are seeing there's more rate cuts that's been happening. And during this week's recent FOMC meeting, the federal chair meeting in the US, he made it clear in black and white, which is great news, that there's going to be 2 more rate cuts to be expected for the remainder of this year, 2025, which means, as we all know, whenever there is more rate cuts, that means there is that inclination to borrow money from banks in order to invest intelligent initiatives, particularly on those top-grade equity stocks. But for me, it's going to be a question of investing in Bitcoin at this low reduced rate cuts that's expected to take place, not just in the US central bank, at the Fed, but in many other central banks in the large economies around the world. They're going to be doing the same thing, because whatever the US does, the rest of the world's central banks are going to follow suit. And importantly, there'll be more borrowings from investors in order to draw in more capital into those top-graded equity stocks that I've talked about earlier, and more importantly for me, Bitcoin. So that is happening, and that's just going to continue on the same trend journey on that. The next point around financial advisors being pressured to allocate a minimum 1 to 2% of their client portfolios now into Bitcoin. So moving away from the 0% allocation Bitcoin to a minimum 1 to 2%, that is happening. And this is actually being picked up even more. So I think the only challenge or homework left to do for these financial advisors in these major capital asset management firms like BlackRock and all the rest of it is to actually encourage their clients to increase to maybe up to 5, 10, even 15, 20% allocation to Bitcoin. Given the recent achievements that I've mentioned earlier on, right? It's becoming a more risk-off asset, because as Bitcoin evolves and is becoming more mainstream, it's going to reduce the risk actually investing into the asset class, which will mean it will draw in more participants, more institutions, even more nation states adopting Bitcoin and allocating a proportionate amount of their wealth into Bitcoin as a result. So this is going to be, again, another train journey that's going to set to continue indefinitely. The next point around banks offering clients to trade and custody Bitcoin. Again, this has been accomplished, which is why I put in green, because we are seeing many examples of financial institutions who are offering this Bitcoin custody services to their clients. We've got Nubank, which was the first bank in the world in Brazil to have offered this Bitcoin custody services. We also have examples like BBVA, one of the top financial institutions in Spain, to offer the same thing. We have Standard Chartered Bank in the UK, and also other financial institutions are going to be following suit. So again, as with the rest of the points I mentioned earlier on, this point is going to continue and it's going to pick up momentum throughout this year. Now, the next point, like I said, the US is expected to implement Bitcoin as a strategic Bitcoin reserve at the federal level. Remember, Trump has only signed an executive order, and it's expected for the bill to be ushered through and voted in the House of Congress and House of Representatives as a bipartisan issue. That's the only thing that's pending at the moment. But I'm confident that once that is signed and is a done deal and is implemented, we're going to see other nation states doing the same thing. It doesn't necessarily mean that the countries, mind you, won't be acquiring Bitcoins. They'll be doing that, but they're doing it quietly in the backstage, because the last thing they want to do is they want to publicly announce what they're doing, in which case what would happen there is clearly there's going to be a spike in price, which will make it difficult for the nation states to buy at the discount, which is currently where we are at the moment. So that is why I place a question mark, because that is currently in the woodworks. The next point around in-kind ETFs coming soon. We have seen that in Hong Kong, they have been the first nation state to have approved this denominated first Bitcoin in-kind ETFs. Now, what does this mean? It means that it would allow investors to kind of swap their Bitcoin into these in-kind Bitcoin ETFs without being charged tax. Then I expect the US to actually implement what has been done in Hong Kong. And when this happens, this is going to notice a marginal improvement, increasing more capital into the Bitcoin ETFs at large in the US. And I expect other territories who have recently approved their Bitcoin ETFs in their territories to adopt a similarly an in-kind Bitcoin ETFs in their territories, which is great news. Now, this draws in another 2 points where I feel there's still homework to be done for me. The first one is regulatory framework for stablecoins in the US. We've heard from Senator Loomis and her colleagues in White House advocating that this is the priority for the country in order to protect the dominance of their US dollar. Well, what they're trying to do is they're trying to add pegged fiat US dollar in Tether, which is the leading private issuer of these fiat pegged stablecoin in the US dollar. So it's going to provide regulatory framework clarity to enable Tether as a private issuing company to issue these Tether stablecoins. Which leads into the last point where I feel for me it would be the end game, because if you think about it, I'm a Bitcoin investor, I'm a hodler as well for the long term. There's many of us investors who are kindly concerned about the only way to actually profit take or capitalize on their gains as a result of the increase in price during this holding period. The only way to achieve that is to sell off and relinquish some of our Bitcoin holdings in our stash. Well, there is a concern that we don't want to do that. Why would we have to sell off our Bitcoin holdings in order to profit take? Can we find another financial product that would enable us to continue to hold on to our Bitcoin holdings, but perhaps earn like a rental premium on the side rather than selling off our Bitcoin holdings? Well, that's what I meant by this last point. There is this gap in the marketplace, and there is going to be an emergence of these kind of Bitcoin denominated investment products, which means there's going to be heaps of financial products where we're going to see Bitcoin bolted on as a component in order to yield a higher rate of return without relinquishing or giving up your Bitcoin holdings as a result. So this is going to be, for me, the major gap in the market that is currently being worked on. This is still going to take some time to do, but when it happens, we're going to see this God candle effect happening as a normality, because there's this scarcity factor that we all know of around Bitcoin. There's only going to be 21 million coins in circulation, and as there's more retention and less coins being mined by the Bitcoin miners available in the marketplace to sell, well, this scarcity shock is going to be felt quite rapidly. And when that happens, we all know from supply and demand, when there is a supply shock in the system, because there aren't enough Bitcoins available to sell in the market, well, the price will have to shoot up. It's not just me saying it. There's many other Bitcoin leading advocates who are claiming the same thing. It's just a question of time. So that's all I have for you today. Hopefully you enjoyed today's episode. If you have, please don't forget to like and share the video to friends, colleagues at work. And if you haven't done so already, please subscribe to my channel, as I regularly publish some interesting videos such as these, anything to do with Bitcoin, blockchain technology, and the future of finance. So until next time.